Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny and Bert. The Dividend Diplomat. We're featuring two stocks that have fallen rapidly over the last couple weeks. One stock is down 10% over the last month. The other stock is down 15% in the last week. Is it time to catch these stocks while they're falling? Are you catching that falling knife, or are you getting a great value on these two epic dividend stocks?
Bert's all about value, but before we do, guys, let's subscribe to the channel. Let's give this video a thumbs up. Stock market, it's finally hitting a little bit of turbulence here
Mm-hmm.
as we're filming this here on November. It's the 13th or 14th,
I don't
Bert.
even know. It's the 14th, according to
It's
my
the
computer.
14th. So we've had a couple soft down days, but the market is still up almost 26% still year to date, about 25 and a half.
And no matter what's going on in the market, the real thing is Bitcoin right now. That's where the story is, right, Lanny? Breaks through 80,000, breaks through 90,000, and Bitcoin what? Fell back down right at the time of this video. It's just above 88,000. So, yeah, hanging in those high 80s right now. It's a wild time to be a Bitcoin investor, but it's also a wild time to be a dividend investor.
Dogecoin holder.
That too, a Dogecoin holder is probably even crazier.
I actually own some Doge. I've had it
Yeah.
for like
Yeah.
years.
Oh yeah, I'm sure back when you throw a little few shekels on it, right? Get some Doge, baby. That's what it's all about. Woo! All right. Although I am okay, not to keep harping on the Bitcoin, I am laughing at all those NFL players. Like, have you seen all those like articles with the sports players now that like when Bitcoin was at its last peak in the 60s, they're like, we're taking our salary in Bitcoin, then it crashed. You hadn't heard from them
Yeah,
until
Odell
until like
Beckham is one of them.
Yeah, until right now when everyone's like, see, we told you we knew you should have taken our salary in Bitcoin. So, all right, let us know. Let them
Let
know.
us know, guys, what you've been investing into and what stocks or coin or other assets have been flying for you. But Bert's got two stocks that are
Hmm.
hitting the the little turbulence meter as well here, coming down in price. One stock is down incredibly over 15% over the last 5 days. They're about 300 billion in market cap, and another almost 50 billion in market cap. It's just, getting hit with the interest rates.
Yeah, so this first one, the company we're talking about, ABB, ticker symbol ABB. It's been a while since we featured ABB on our channel. As we've said a few times now, they are down 15.67% over the last 5 days. They dropped like crazy during this week because schizophrenia drug, terrible trial. They were in the mid testing level, whatever they call it, failed. But what made it even worse, Lanny, this wasn't an internally developed drug that they created where it just had a little bit of money invested in it. They purchased a company for nearly $9 billion for this drug, and the drug didn't pass the trial.
Mm.
So that
And
sent AbbVie shares tumbling as a result, as you'd expect.
it all comes tumbling down on the stocks that I love.
Yeah, so let's see though. The question is, how are they performing through our stock screener? We're going to run them through. We're going to talk about those metrics, the price to earnings ratio, the payout ratio, the history of increasing dividends, the dividend yield, and that bonus metric. Oh, that bonus metric is the dividend yield. Whew. Let's get right in here, Lanny.
With the
What is that?
coffee farm guys.
Yeah, coffee wore off a long time ago. Why don't you tell us, Lanny, what is that price to earnings ratio for
Yeah,
AbbVie?
of course. Yeah, let me take it right here, Bert. So yeah, we got a 15.5 PE ratio, undervalued over the S&P 500, but kind of overvalued in the big pharma space because everybody's getting smacked up because of big old Bob Kennedy coming in, storming in, maybe taking on big pharma. Let us know if you guys are scared of pharma or you guys think this is all just speculation, guys. But Bert, it's all about the dividend payout ratio from the dividend growth stocks. We want to see the safety in the dividend. AbbVie, again, was a former spinoff from Abbott Labs, who is a dividend aristocrat, possibly even a dividend king. So
I
you
thought
know
they
it's
were a
coming.
dividend king. I'm pretty sure they
Oh,
were a dividend king,
man.
but regardless, it doesn't matter. Abbott was a great dividend stock, so Abbey is translating. They've increased that dividend every year since then.
Yeah,
So,
60% payout ratio. And Bert, yeah, like you said, double digit dividend growth rate over 11 years. Now, the
yeah.
last one was pretty small, but 5 year average is still over 7%.
Yeah, that's right. That last dividend increase was 5.8%, so it was a hair below that 5-year average. Still, though, great increase, especially when you consider the yield. That yield is 3.87%, which is actually below its 5-year average yield of 4.14%. So,
Not good. I don't like that.
yeah, performance-wise, year to date, even after this big drop, they're still up 6% year to date, up 22% over the last year. Over the last 5 years, they're up 91.39%. So AbbVie is still performing well despite this drop of 15% in the last 5 days.
There we go, guys. That's AbbVie. Now, Bert, if you look at it, 170 share price, yielding still 27 basis points above their 5-year average. Do you like it at this price, or does it need to come down further for you?
I think it needs to come down further, and this is going to sound shocking. It's got to come down a lot further. AbbVie, I'm not even going to look at them until they're around
155?
I was going to say 150, make it nice and flat where that yield pops up to about 4.4%. Obviously, that's got a lot of room to go. That's another, over 10% drop for AbbVie. So despite that, despite the fact that it's falling, not touching it, I still want to see AbbVie fall even further before I'm considering buying this dividend stock.
So yeah, Bert, guys, let us know what you guys think about AbbVie. Are you grabbing it now, or do you think it's still too early to grab the possibly sharp blade from the AbbVie knife, guys? But we said that there were two stocks here. Bert never comes in with just the one stock to buy. He's looking at another stock that's a passive income growing, financial freedom flowing dividend machine here.
We just featured them on our channel a week or so ago as my favorite dividend stock that was on special, but we're going to be talking Realty Income, ticker symbol O.
Uh,
In that
oh,
video, I said I'd be interested in buying Realty Income if it hit $55 a share. That video popped up a little bit, of course, because all of our viewers ran to buy some shares. Sending that price up high because of the demand. But then it came right back down when Jerome Powell said this week, we're not going to rush here to do the interest rate cut. We're not in a hurry here. We're not in a panic. Sent those rates back up, sent the REITs tumbling. O is now 56.07. So yeah, they're getting close to the 55 price that I like, Lanny.
getting there. You're right there, guys. Now it's a split for the next rate cut on December 18th. It's about 40, 60, 45, 55 split according to the CME group right now for another rate drop of 25 basis points. So, again, the fear is that long-term rates staying higher for longer and the short-term rates are still kind of smacking around. Just take a look, at the bond market, essentially. But let's look at them through the DD stock screener again. Instead of earnings per share for again, the passive income monthly dividend income paying machine here, we're going to look at the funds from operations here, guys. Again, trading at 56.07. Bert, what does the FFO look like here?
13.38 price to FFO ratio because that FFO is $4.19. So a modestly priced REIT. Let's look at that payout ratio because that's where Realty Income always seems to shine. That dividend is $3.16 at a payout ratio of 75%, which when you adjust it for REITs, that's actually very low. REITs are typically higher on the spectrum. You'll see a lot of REITs in that 80, 90% payout ratio.
You're tracking.
Yeah, very good for Realty Income. Very pumped with it.
Yeah, and when you look at the dividend growth, guys, again, they're a dividend aristocrat. They've been it now for a couple of years. And, they grow the dividend every single quarter, almost 3.5%, 4% every single year, compounding dividend growth rate, which pairs well with that bonus metric, that dividend yield of 5.64%, yielding well above their 5-year average, almost by a full percent here.
Yeah, year to date, they're down 4%. Last month, they're down nearly 10%. Last 52 weeks, they are up 7.54%. And over the last 5 years, they are down 25%. So that's Realty Income. I've already said the buy zone's at 55 per share. We're really not that far off from Realty Income.
Yeah, sounds like you're closer to buy O than you are AbbVie, but AbbVie you're kind of keeping on the radar because, hey, is this finally a time? Because there hasn't been really too many times to buy AbbVie in the last 7 years, maybe COVID, obviously, but this is interesting.
Yeah, so everyone let me know, do you agree 150 per share for AbbVie? 55 per share for Realty Income. Let me know if you think those buy targets are reasonable for those two stocks in that comment section below.
Guys, let us know what stocks you're buying. How much passive income are you adding? Like the video, subscribe to this channel, and Bert, tell them like it is.
You're either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.